Hello everyone and welcome back to Explain the Charts. Today, September 18th, 2024, we're analyzing XAUUSD, the gold price against the US dollar. Let's start by looking at the latest news surrounding the gold market. Gold prices have been on a tear recently, hitting record highs this week, driven by a combination of factors. One of the most significant factors is the expectation of interest rate cuts by the Federal Reserve. The Fed is expected to lower rates for the first time in 4 years, which could lead to a decline in the US dollar and a rise in gold prices. This week, the Fed actually cut rates by 50 basis points, marking the first rate cut in 4 years. While this was a significant move, it is important to note that the market has already priced in a 25 basis point rate cut, so the actual cut was slightly more aggressive than anticipated. Another key driver for gold prices is central bank demand. Central banks around the world, particularly those in emerging markets, are continuing to buy gold, looking to diversify their assets and hedge against macroeconomic and geopolitical risks. This has been a major source of demand for gold in recent months and is expected to continue supporting prices. Geopolitical tensions are also playing a role in the gold market. The recent conflicts in the Middle East are adding to risk aversion, which is boosting demand for safe haven assets like gold. These conflicts are expected to escalate in the coming months, which could further support gold prices. Now let's transition to the charts to get a clearer picture of the current gold market. I'm starting with the one-day chart. We can see that gold has been in a strong upward trend in recent months, breaking through several resistance levels. The current all-time high is $2,589.50, and the bulls are eyeing a move towards $2,600. This week, we saw a pullback from the all-time high as the US dollar experienced a late recovery. However, the long-term outlook for gold remains positive. Now let's narrow down to a smaller time frame to get a better idea of the current price action. I'm switching to the 1-hour chart, focusing on the recent trading session. We can see that gold has been consolidating near record highs, with the bulls remaining in control. The price is currently trading above the 20 SMA, which is providing support. There are a couple of key resistance levels to watch. The first is $2,600, which could trigger a short-term pullback. The second is the all-time high of $2,589.50, which could provide more significant resistance. Looking ahead, the upcoming labor market data is crucial, as it could significantly impact the market. Investors are closely watching the non-farm payrolls (NFP) report on Friday. A strong NFP report could strengthen the US dollar and put downward pressure on gold prices. However, a weak NFP report could further weaken the US dollar and boost gold prices. So, it's essential to be aware of these potential catalysts in the short term. Let's take a look at the 15-minute chart to see if we can find any clues for short-term trading opportunities. Here, we see the recent consolidation around the record highs. The price is currently testing the $2,589.50 resistance level. A break above this level could fuel a rally towards $2,600. However, a rejection at this level could lead to a pullback. It's important to look for confirmation of a breakout or breakdown before entering a trade. For example, a break above $2,589.50 with increased volume and a candle close above this level would provide strong confirmation of a bullish breakout. Conversely, a candle close below $2,589.50 with increased volume would confirm a bearish breakdown. The 15-minute chart can be a great tool for identifying potential short-term trading opportunities, but it's important to remember that short-term trading is inherently riskier. Now that we've reviewed the charts, let's recap the key price levels to watch in the gold market. The current all-time high is $2,589.50, which is a major resistance level to watch. A break above this level would confirm a bullish breakout and could fuel a rally towards $2,600. The 20 SMA on the 1-hour chart is providing support, currently around $2,575. A break below this level could lead to a short-term pullback. In the short term, gold is facing headwinds from the recent recovery in the US dollar, but the long-term outlook remains positive. The expectation of continued interest rate cuts, central bank demand, and escalating geopolitical tensions are all supportive of higher gold prices. The upcoming labor market data is crucial, as it could significantly impact the market. A strong NFB report could strengthen the US dollar and put downward pressure on gold prices. However, a weak NFB report could further weaken the US dollar and boost gold prices. It's essential to keep a close eye on the news and market sentiment surrounding gold, as these factors can have a significant impact on the price action. By carefully analyzing the news and charts, you can gain a deeper understanding of the current gold market and make more informed trading decisions. Remember, this analysis is for informational purposes only and should not be considered investment advice.